What's up, you guys? Today we are going to be covering the topic of whether or not ads are tax write-offs for realtors. For those of you who haven't met me yet, my name is Nate with IGM, the Realtors photographer, and we're all about helping realtors grow their business and create high-quality content that resonates with their audience. All that being said, today we're going to be unpacking the topic of whether or not ads and content creation are tax write-offs for realtors. By the way, do not take any of this for actual legal advice. Please consult with your accountant or a lawyer, as we are just providing information based on what's current today. Now, when looking at the IRS and understanding whether or not they're write-offs, it kind of boils down to one main rule in particular, and that is it an ordinary and necessary expense for the business? Now, when we say ordinary, what do we mean by this? It is what is considered to be common and accepted in your industry. Now, when it comes to necessary, that is where we are talking about things such as helpful and appropriate for your business. Now, when applying that to your marketing, advertising, and content creation strategies or processes, you have to ask yourself, are these ordinary and necessary expenses? Well, the possibilities are kind of endless, but you always have to refer back to ordinary necessary expenses. If you're going out and creating a video talking about a local restaurant and you're buying the whole team lunch to review it and buying drinks for everybody because it's all part of your video, well, that probably isn't going to be considered necessary to talk about the local restaurant for your highlight video. That being said, the production crew that you were to hire, let's say IGM, to come and shoot that would be considered a write-off because it is a necessary expense to create that high quality content that you're looking for to put out onto your channel. And that same thing applies for whether it's an Instagram reel, a house video for a listing, or a YouTube video for your channel. Now let's talk about different kinds of ads that are applicable to be tax write-offs. Now, the beauty of this is almost all digital advertising can be considered tax write-offs. Now, there are some interesting rules and regulations when it comes to promotional things that have contingencies and, requirements and all of that fun stuff. So I'd encourage you to look onto that on your own. But when it comes to digital ads that promote your business, an open house, a new listing, your brand identity, those all fall within the realm of ordinary and necessary to grow your business. So whether that's a search campaign on Google, a brand awareness campaign on YouTube, or a open house campaign for your upcoming open house on Instagram or Facebook, then yes, those are all considered tax write-offs for you as a realtor. Along with that, the nice piece about that is the format doesn't matter for whether it's a write-off or not. So you can do graphic display ads, you can do visual image ads, you can do video ads too, and those are all falling under that write-off category. So let's say that you're a realtor and you just got a new listing in Tacoma, Washington. So in order to help promote and sell that listing, you're gonna do your listing photo and video and media package, which all that could be a write-off because it's a necessary and ordinary expense to list and sell that house on the market. You could create a YouTube video talking about the Tacoma area and neighborhood that home is in, and you could pay for a production company to come out and write off that expense rather than having to film it or edit it yourself as well. Along with that, if you were to schedule an open house and want to promote that, you can make a quick reel about it and then boost it on Instagram, Facebook, TikTok, and YouTube Shorts so people know about it and sign up, and then come to that open house. All those little promo materials, signs, flyers, etc., those can all be written off as well because it's all an ordinary and necessary expense to market and help sell that home. Now, my personal favorite part about all of this is you're able to help grow your business as a realtor while writing off the expenses from listing a house. If you make a video talking about the neighborhood that the home is and talking about some of the favorite community highlights, the restaurants, the walkability, the schools, all those things, you're doing it in light of the home that you're listing, but you're also selling yourself as a realtor. Because now people who are shopping for homes are going to be seeing the dedication, the time, the effort, the knowledge that you have. And ultimately, that's going to speak volumes about you as a realtor. So then in the future, even if they just buy from you, they might sell with you later because they see how much you put into it. Overall, using tax write-offs as a way to grow your business and save some money is a great strategy for any realtor. The number one piece with all this, though, is just keep record and receipt of all the different expenses that you build up, so that then if anything does come up with the IRS, you can reference them. And while it doesn't guarantee the full write-off, it does let you have notes. So video shot on this date for this channel for this house. Those are great things to keep in mind as you go through this process, or maybe just start writing things off for the first time. Thanks for following along, you guys. And if you have any questions, please make sure to comment below and hit that subscribe button to learn more from IGM, the Realtors photographer. Do not take any of this for actual legal advice. Please consult with your accountant or a lawyer.